Hello, my name is Andy Holton and I'm Head of Publications at Mercia. And it's my pleasure to present this short webinar to you explaining the changes made to the HKICPA Audit Practice Manual on implementation of HKSA 315 revised. The changes made in this update also embed the changes made by HKSA 540 regarding assessment of risk and dealing with estimates. So we will touch on that as we go through as well. As we look at the changes to some of the key forms, we will also be looking at the manufacturing case study and using examples from that, which has also been updated to illustrate the changes to the forms. So let's begin with an overview of what has changed. So most of the forms that have changed are in the planning section. So a lot of HKSA 315 impacts on risk assessment and therefore things that we should consider in relation to risk assessment, and therefore that occurs within the planning section. Then a lot of the information that we gather to enable that more detailed risk assessment is recorded on the permanent file. So a lot of the changes are in the planning section and the permanent file. And then some of those matters then flow through into the completion section. So we do have some changes to the forms there. But there are actually no new forms as a result of these changes. However, as we will see, there have been some quite significant changes to a couple of the risk assessment forms. Some forms have also been removed. So C13.1 dealing with accountancy work planning, and also Appendix 4 forms dealing with HKAS 11 construction contracts have been taken out because they have obviously been superseded by HKFRS 15. There have been a number of other minor text changes and changes to terminology throughout the manual. However, I'm not going to draw attention to those because they largely don't affect the process or the audit approach, and therefore they're not relevant to this overview of the main changes. The APM guidance notes have also been updated. So this includes updating all the disclosure checklists. So the small and medium-sized entity financial reporting framework and standard checklists, HKFRS for private entities, and also general HKFRS and the company's ordinance checklist have all been updated to the December 21 versions. Updates have also been made to example letters, including letters of engagement, letters of representation, etc. And a new section has been added to the guidance notes dealing with audit data analytics. So this is something that is beginning to be more significant in the way that audits are conducted. So there is guidance there on how these can be applied. So this is whether it's off-the-shelf software that a firm can then tailor the parameters within it, or whether it's the firm developing its own tools within Excel, for example. There is guidance on the sort of issues that need to be considered in assessing and implementing audit data analytics. And we will touch on this again when we get to preliminary analytical review. In the manufacturing case study, the example financial statements have been updated. So these now reflect HKFRS requirements as at 31st December 21. And in addition to updating the case study to use the new form, so in particular reflecting the additional work on implementation of the revised HKSA 315, the work on HKSA 540 has been embedded within the manufacturing case study, whereas before the examples were standalone. And the documentation has been just generally enhanced and strengthened throughout to illustrate compliance with the auditing and accounting standards. So let's move on and look in a little bit more detail at what has changed in each section. So looking at the planning forms, C1 is the summary planning form, and 3 new sections have been added to that, and they reflect 3 new sections that have been added to C4, which is the checklist for understanding the entity. So we will pick up on these changes in a little bit more detail on the next slide when we look at the changes to C4. Then C2.1 is the independence questionnaire. This has been revised to reflect the changes for the new code of ethics. So in particular, revisions to fee-related provisions of the code, non-assurance services in relation to the provisions of the code, and then also objectivity of an engagement quality reviewer or other appropriate reviewer to fit in with the requirements of the new quality management standards. So in particular, HKSQM2 dealing with an engagement quality reviewer. So C4, as I mentioned just now, we've got 3 new sections. So evaluation of the entity's risk assessment process, evaluation of the entity's process to monitor the systems of internal control, and evaluation of the entity's information system. 3 areas where HKSA 315 specifically requires greater understanding of the process and evaluation as that feeds into risk assessment. So looking at some of the changes to the forms themselves, you can see here we've got the section heading, evaluation of the entity's risk assessment process. So then the question, evaluate whether the entity's risk assessment process is appropriate to the entity's circumstances, considering the nature and complexity of the entity. We've then got a summary of that assessment, but note we've got reference to the permanent file. So certainly that's where our understanding of the nature and complexity of the entity is recorded. So this is very much a checklist of information. The expectation is that this is recorded in more detail within other forms, and we just have a brief summary of the position on this checklist. And also note at the bottom, we've got some application guidance, and this has been added where appropriate and taken from HKSA 315 to assist you in interpreting what is needed for these new questions. So here we have evaluation of the entity's process to monitor systems of internal control. So again, the question is evaluate whether the entity's process for monitoring the system's internal control is appropriate to the entity's circumstances, considering the nature and complexity of the entity. So again, it's the evaluation is based on understanding of the processes. So we need to have those processes documented on the permanent file as a basis for making that evaluation. And again, note the reference to application guidance that's taken from HKSA 315. And then the same points again apply really in relation to evaluation of the entity's information system. We need to document that evaluation based on information that we've recorded on the permanent file. And in this instance, we've also got some references to work on controls in relation to that information system. Moving on to C4.1, this is the review of accounting estimates. So this form was added in the previous update, and a small amendment has been made to the form in this update, and that is basically to just split one column so that we've got the overall assessment of risk split out from the work in relation to that risk that is then documented on D3. So you can see that clearly here. I've highlighted the additional column in yellow, and previously the column in yellow and the column to the immediate left were combined. So it's just now easier to document the various matters on this form. The other change that has been made to the form is just cosmetic. You can see at the top of the form in the headers, we've got note 1, note 2, note 3, etc. Previously, these notes were actually the text of the notes were actually included in the header, which did make the form a little bit cumbersome in that you lost a lot of the space on the page, on each page, with those notes. So we've now included these just as footnotes at the end of the form to make it a bit more user-friendly when completing it. And then finally here, looking at on this slide, C5 internal controls, a few questions have been added, prompting consideration of whether control weaknesses in combination constitute a significant deficiency. So this will be where we identify a number of weaknesses, and each weakness individually doesn't appear to be that significant. But a feature of HKSA 315 is standing back and looking at the big picture, that stand back requirement. And this applies to controls as well as to risks. So it's standing back and looking, well, actually, we've got a number of control weaknesses here. Do they actually add up to a significant problem? And that's the change that has been added to C5. C6, preliminary analytical procedures. As I mentioned earlier, we've added a section here dealing with audit data analytics. So clearly, if you're not using data analytics, this section can be ignored. If you are going to use them, then this is addressing matters such as, looking at the software, if it's off the shelf, are you satisfied with the parameter set, the algorithms that are being used? Similarly, if you've designed your own spreadsheet, are you satisfied that the formulas in it are appropriate for what you want to do? And also, have you considered things like integrity of data, completeness, accuracy of data, etc.? All those sorts of issues around the use of audit data analytics, prompting questions have been added to the preliminary analytical procedures form. Then moving on to risk assessment, a number of changes have been made to the detailed checklist. So firstly, highlighting that in the APM, high risk equates to significant risk. So we still have just 3 levels of risk within the APM: low, medium, and high stroke significant. We've then got guidance from HKSA 315 added to some of the questions, and then questions added on the evaluation of whether evidence from risk assessment procedures is sufficient for a risk assessment. So actually, have we got enough information on the client to properly assess risk? And then questions confirming that transactions and balances and disclosures assessed as not significant remain so. So again, it's an element of that stand back requirement to look again and say, well, at the start of the planning process, we concluded this area was insignificant. Actually, does that remain the case given what we have learned in the intervening period? And certainly, and then a prompt to consider the impact of any new information that is inconsistent with assessed risks. So essentially making sure we're not don't have confirmation bias. We are actually looking at things where there are inconsistencies. Then moving on to the more detailed risk forms. So C8.1 is a detailed risk assessment. This checklist has been reordered and some of the sections renamed, and there are 1 or 2 new questions, but most of the actual detail of the checklist is unchanged, although in presentation terms, it does look a little bit different. But then moving on to C8.2, the financial statement risk action plan. So financial statement level risks, a new column has been added to record whether risks at the financial statement level actually have an impact at the assertion level. And you can see that on this slide, the new column has been highlighted. So this just makes it clearer where a financial statement level risk actually has an impact at the assertion level and would therefore flow through in the various aspects, well, depending which assertions it hits, then flows through into the assertion level risk assessment on C8.3. And that brings us to C8.3, and this is the form that has the most significant changes, as you can see from the following screenshots. And once we've looked at the changes to the form, we will then look at some examples from the updated manufacturing company case study. So this is the previous version of the form. So we've got the risk identified, our assessment of that risk, management's response, the areas affected by the risk, the audit approach, and then a reference to the outcome of that risk in the B section. On this slide, you can see highlighted yellow where we've got changes to that form. So firstly, highlighted at the top, just making it clear that a high risk equates to a significant risk in the HKSAs, just to emphasize that point. We've then got the financial areas affected specified in more detail. So we're talking about classes of transactions and account balances and disclosures, just to make it much clearer what the risk affects. But then probably the most important change is that we've got firstly, or important changes, as we have firstly a split between inherent risk and control risk. So we need to consider those separately. So we look at inherent risk, and then we also assess control risk before arriving at an overall risk of material misstatement. But then when we look at inherent risk, we need to look at that in much more detail and consider different aspects of the inherent risk. So we need to consider the complexity of the area concerned. So perhaps if we're looking at revenue recognition or something like that, we're looking at the complexity of the revenue streams, the nature of the contracts, etc. Any subjectivity involved in determining values or dates or apportionment, any changes that have been made in the period, any uncertainties in relation to the revenue recognition, susceptibility to management bias or other fraud and risk factors. So we need to have separate assessments for each of those that then feed into our overall assessment of inherent risk. Our management response, our audit approach, and our reference to outcome are then the same as the previous form. So looking at how this feeds into an example, this is taken from the manufacturing case study. So this is fraud concerning revenue recognition, and this affects all assertions related to revenue. So the nature of this example is it doesn't fit comfortably on one slide, so you can see that the management bias element of inherent risk will be dealt with on the next slide. So looking at these different aspects of inherent risk, the manufacturing company, it sells physical products, so it sells sound cards and things, products such as that. So actually, with complexity isn't that great. We have a relatively straightforward system through the sale of goods. There is very little subjectivity involved because we have sold some goods. We have listed prices for those goods. Nothing has changed in the period, and there is very little uncertainty. However, the inherent risk is assessed as high, and there's two reasons for that. Firstly, fraud concerning revenue recognition is a default high risk. So it's high risk unless we can rebut it. As we will see on the next slide, the risk of management override is high given the close involvement of management, and that's why that high risk hasn't been rebutted. We then move on to the management response to those risks. So we're highlighting there the controls that the client has in place, and we can therefore see that generally controls over this are quite good. We're actually going to place reliance on them and do some testing. However, because we haven't rebutted that default high risk, the overall risk of management, risk of material misstatement remains at high. We then start to set out our audit approach in relation to the various risks that we have identified. And you can see that this then flows into the second slide. So here we've got the subjectivity and management bias. We've concluded here that the risk assessment is high because the directors / shareholders are closely involved in the running of the business. We've got a high risk of management override, and therefore any controls that might, in theory, prevent fraud in relation to revenue recognition could be overwritten. Hence, that assumption has not been rebutted. And we've then got more detail of the work that is set out on revenue. Though that is very much a summary, the detail is then obviously set out in detail on the audit programme and on R6. Moving on to another example, this is sales invoices may be processed as a sale in this year, but goods not dispatched until the next year. So basically a cut-off risk. So again, running down complexity, subjectivity, any changes, uncertainty. None of these are particularly high risk areas given the nature of the business and the systems. But again, we've got that high risk of management override, and we are not relying on controls in this area. So that means that if we're not going to assess the control risk, then the inherent risk is automatically the risk of material misstatement. And again, we've set out our audit work in response to the cut-off risks. A few other changes to the planning section. So the notes of engagement team meeting have got a number of questions added. So application of the financial reporting framework, susceptibility to material misstatement due to fraud involving related parties, disclosures regarding the disclosures required by the applicable financial reporting framework, and then how any matters are communicated to audit team members not present. So much more emphasis on the engagement team meeting, and therefore the prompts for the notes include more detail in the areas we've just mentioned. And similarly, the engagement team planning meeting checklist, questions have been added to prompt discussions about disclosures in the applicable financial reporting framework. And then finally, in the planning section, C12 deals with engagement quality, and questions have been added about compliance with relevant ethical requirements, and also updating budgets and timetables to allow time for safeguards, engagement quality reviews, any responses such as that to be actually ensure that they can occur. A failure we often see is that planned ethical safeguards don't take place because there was no time at the end of the audit. So building that into budgets and timetables will seek to avert that problem. So moving on to the completion section, only a couple of changes here. Firstly, the second partner review or engagement quality control review, if we're working under HKSQC1, or the engagement quality review under HKSQM2. So we've got two versions of that second partner review engagement quality review form, depending on the period that you're dealing with. Then on B6, the audit highlights, some additional questions have been added regarding indications of fraud. Then moving on to the permanent file, we've got a number of questions added to the Know Your Client checklist. And a lot of these you'll see feedback to questions that were added to the C4 risk assessment form. So questions like the entity's risk assessment process, monitoring control activities, the control environment. Those all were issues that were added to C4, but we've also got more detailed consideration of ownership and governance, and also the use of information from external sources. And a number of sections have been added to deal with those. And then also in the new client checklist on PAF 08, more detailed anti-money laundering questions and guidance have been added to ensure compliance with the AML regime. So just looking at some of the changes to the permanent file forms, again, you can see from the example on the slide, this is ownership and governance, one of the new sections, that where we've got yes answers, there are then references to where that information is recorded on the permanent file. This is a checklist to check that the information is recorded elsewhere. The intention is certainly not that you add the information to this checklist, because there simply isn't the space to do that. So where we've got yes answers, we need a reference to where the information is recorded, and clearly if it's not applicable, there is nothing to record. And this is the same point here in relation to accounting framework and accounting policies. So again, you can see where we've got yes answers, we've got references to where that is dealt with. These are the some of the additional questions dealing with the control environment. So again, you can see we've got yes answers and a reference, but also note that we've again included guidance from HKSA 315 on interpreting these questions. So as we've got new questions, so what sort of things do we need to consider? Well, we've included guidance in the forms to help you with that. And then again, same points apply here in relation to the entity's risk assessment process. And then again, also the process to monitor systems of internal control. You can see we've got yes answers and cross references. We've got guidance in relation to completion of the form. So that's just a brief overview of the changes made to the APM. More help on using the APM is included in the guidance notes and is also illustrated in the manufacturing case study. Thank you for your attention.